Well, this week, many people are faced with making their second mortgage payment in the midst of record unemployment. Lawmakers in Washington and on Beacon Hill have promised relief, and they've passed laws guaranteeing it. But is it actually helping homeowners? We found that help is still tough to come by.
We are out of business suddenly, as are many, many other self-employed people. And our business is not just going to come roaring back with a light switch.
It was 1 month ago we first met Peter and Christine Poulos.
This is completely lost income.
This Norwood couple worked as event video photographers, an industry which vanished overnight. At the time, they were having trouble getting mortgage relief promised on Bank of America's website, deferring payments and moving them to the end of their loan. But that was because their mortgage was only serviced by Bank of America. It's actually owned by federal mortgage giant Freddie Mac.
The most sensible option would be to put the payments at the end of the loan and have it in writing in advance. What's so hard about that?
Well, apparently that is still tough to come by despite record unemployment and economic collapse. The CARES Act, the federal stimulus bill passed by Congress last month, does require a number of relief options for federally backed mortgages, like the Pouloses. Lenders must offer up to a year of deferred payments, known as forbearance, and can't charge extra penalties or interest or notify credit reporting agencies. But just getting that much was tough for the Liddells.
It was a lot of going around, a lot of, well, you don't qualify for anything.
The VA owns their mortgage, but until they found this VA list of relief mandated by Congress, they say they were pushed toward a less attractive program.
Basically, there just was no option at that point besides deferring the payments for 3 months, but then having the balloon payment, due at the end of that.
But even the CARES Act is silent as to what happens next after a year of deferment, which has homeowners worried they'll face a huge lump sum payment.
He said, yes, you'd be taking a risk because we would be evaluating it at that point in time.
Massachusetts lawmakers stepped in last week and, as part of the foreclosure and eviction law signed by the governor, required mortgage companies doing business in the state to let homeowners financially affected by the pandemic put 6 months of missed payments on the end of their loan. No penalties assessed. But the Pouloses and others tell us they still can't get that guaranteed before they agree to enter the relief program.
I think they want the option of making a demand. We're going to exhaust every other resource we have. And if it gets to the point where we truly cannot pay our mortgage, then we will sign up for it and just hope for the best.
All right, so it's Massachusetts Attorney General Maura Healey's job to enforce this state mortgage relief. So she says that homeowners who are having trouble should file a complaint with her office. Both Fannie Mae and Freddie Mac, which again owns the Poulos' loan, insist that homeowners will not be asked to repay missed payments in a lump sum, but both say repayment options will vary from person to person. It certainly seems like a lot of people are still skittish about taking their mortgage company's word.